MA1 Part E. Providing Management Information. Chapter 9. Information for a Comparison. The topics that this presentation will cover are 1. Types of comparison. 2. Identifying differences. 1. By comparing the actual results with other information, it helps to put the actual information in context, and it may show up errors. Comparisons can be financial and non-financial. The choice of the comparison that is used depends on the characteristic of the business, the individual, and the activity being reported. The most common comparison is when one year's final figures are compared with the previous year's final figures. For example, when making a business's financial statements, the previous year's figures are added to compare to the actual year's figures. Some business accounts contain figures for the last 5 years. A long-term trend becomes more obvious over the 5-year comparison. If the comparison is only over 2 years, one or the other year may be unusual for some reason, and distort the comparison. For management accounting purposes, year-on-year comparisons are insufficient by themselves. Management would like to pick up problems sooner than at the end of the year. So management will compare information month by month or quarter by quarter. A quarter is a 3-month period. Comparisons that are made month by month, or quarter by quarter, are only useful when demand is constant throughout the year, but in some cases demand might fluctuate from season to season. Then you would compare one season with the previous season. For an example, see the example on page 167 of your interactive text study guide. A forecast is a prediction on what is likely to happen. At the end of a period, management will compare the actual results with the forecast, and try see why they are different. It could be because the assumptions that were used in the forecast were wrong or incorrect, and management may want to change those assumptions next time they make a forecast. A business may want to make comparisons within the business, and compare the performances of their departments and different sales regions, or make a comparison on a product-by-product basis. Comparisons are not only made on financial information, but you can also use non-financial information. For example, you can compare the number of units produced or sold, measures of quality, customer satisfaction, the time spent on various processes. Most businesses have long-term goals, which are divided into objectives, which are steps that can be measured to help the business achieve their goals, and action plans, which are detailed steps for achieving their goals. Action plans are usually expressed in money, and provide an overall view for management, and an assurance that the different departments' plans coordinate with each other. The financial plan is called a budget. A budget shows whether a business is reaching their target, and it can be combined with other information, such as non-financial information, and ratios. A budget is similar, but not the same as a forecast, as they both give a view of the future. A forecast is a prediction of what is likely to happen, but a budget is more like a target, something that the business wants to achieve. You can use a budget to check that the business's financial plan is working, by comparing the planned amounts with the actual. The differences between the two are called variances. The ways management uses the budget is part of a continuous process of planning, monitoring performance, and taking action on the variances. This continuous process is sometimes called the control cycle. These are the different stages in the control cycle. 1. Decide on the goals and objectives. 2. Develop the plan. 3. Decide on what resources are needed and the performance standard that will be used. 4. Start the operations. 5. Compare the actual performance with the plan. 6. Compare the goals and objective achieved with those defined. 2. Variances can be calculated by either 1. Comparing the fixed budget with the actual results, which is total variance. Or 2. Comparing the flexed budget with the actual results, which is usage or price variance. For a useful comparison, the second type of variance calculation can be used. The differences or variances should be reported in such a way that managers can understand them and can pick out the vital information easily. The comparisons should not be cluttered with irrelevant information or with too much detail. A flexible budget can be adjusted or flexed to reflect the same production levels as was actually achieved. It is a budget that can recognize different cost behavior patterns and is designed to change as the volume of activity changes. They should be used for comparison if the actual level of production is different from the budget. For an example of a flexible budget, see the example on page 171 of your interactive text study guide. Stop the lecture. Answer the question on page 172 of your interactive text study guide. Stop the lecture. Answer the question on page 173 of your interactive text study guide. A budget will help a business become coordinated. It will show the different departments what they need to do to achieve the business's goals. Variance reporting is important in alerting managers to unplanned changes in a section of the business that may affect another section in the business. This is the end of Chapter 9. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part E, Chapter 9. It will be good practice because the online questions are set out like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. Which one of the following options is a financial comparison? A. Number of units produced compared to last year. B. Number of units sold compared to last year. C. Profit compared to last month. D. Customer satisfaction compared to last month. Question 2. A budget is expressed in monetary terms. Is this true or false? Question 3. When are flexible budgets used? A. When the actual level of production is different from the original budget. B. When the actual level of production is the same as the original budget. C. Neither of the above. Question 4. List possible non-financial comparisons that could be made by a manufacturing company. Question 5. A company selling Christmas trees has its sales figures for December. Which sales figures would provide the most meaningful comparison? After doing the quick quiz, do the online questions for Part E, Chapter 9. Do the questions until you achieve 80%. Replay the lecture as needed.